Medicare Supplement Plans. What's ahead for 2026? If you're on a Medicare Supplement plan now or thinking about one, this update is for you. If you're not in that camp, you can probably skip this. I'll cover what's happening with supplement plans, why it's happening, and what realistic options you have going forward. Rising premiums everywhere across the country. Supplement Medigap plan premiums are climbing at record levels. Some plans have seen 0% increases or very modest hikes, but the national average for Plan G in 2025 is up around 13%. In extreme cases, people are reporting increases of 50%, 60%, even over 70%. On top of that, a number of insurers are closing blocks of business, also called deadpooling, which creates its own set of problems. Built-in disadvantages of supplement plans. Before we dig into the increases, let's quickly recap why supplement plans always had a few disadvantages built in. 1. They only fill original Medicare's gaps. Part A and B. You'll still need to buy separate drug, dental, vision, or hearing coverage. 2. You pay a fixed monthly premium sometimes for benefits you rarely use. Now the current wave of rate hikes and the cost-benefit conversation gets harder. Why premiums are exploding through causes healthcare spending. Insurers that sell supplements, Advantage, and Part D drug plans are being hit with record claim costs. When that happens, premiums have to go up. Insurers track this with something called a loss ratio, claims paid divided by premiums collected. Historically, approximately 77%. Today, approximately 85% plus, in some cases, over 100%, insurers paying more in claims than they take in. This imbalance has forced companies to raise rates aggressively. How this shifts the math before 2024. Annual increases averaged. Plan G and F gives 5 to 7%, Plan N gives 4 to 6%. At 7%, premiums doubled in approximately 10 years. Example, $150 month at 65 could become $300 month by 75. But now, 2024 average equals approximately 10%, 2025 average equals approximately 13%, 2026 is expected to be similar or worse. At 13%, that same $150 Plan G, 65 could hit $600 month by age 75. Plan N isn't far behind, with approximately 11 to 12% hikes in 2025. This pace is simply not sustainable for most retirees. The closed block, deadpool problem. Now here's an issue that affects anyone who signed up for a supplement early and got locked in a high-rate pool. Let's say you bought a supplement plan in 2020 when you turned 65. At that time, you were healthy and found a low-cost Plan G policy with a small monthly premium. Years pass and now you're 70. Your plan hasn't changed. But recently, United Healthcare announced they're closing Med plans block to new members. That means no one under 65 or 70 can buy that plan anymore, and that creates a problem. Over time, all new enrollees will be older and generally sicker than the members already in place. So costs go up, but there's no influx of young, healthy members to bring them down again. It's the classic deadpool situation. Now, unfortunately, being in a closed block does not qualify you to switch plans without medical underwriting. That's why many of the 50 to 70% horror story increases come from closed pools. What you can do? Let's talk solutions. First, the good news is medical underwriting is available everywhere. That means if you're healthy, you can apply to switch companies or plan types and you'll likely be approved. If you have moderate conditions, you might get approved, but may cost more. And if you have serious chronic issues, heart disease, COPD, dementia, cancer, advanced diabetes, etc., you'll likely be denied. But even if you are denied, applying doesn't cancel your current plan. That would only happen if you're approved for a new one and choose to switch. Second, some states give you more flexibility. These are the open enrollment states where you can switch plans anytime, regardless of your health status. There are 6: Connecticut, Maine, Massachusetts, New York, Vermont, and Washington. Downside: plans in these states already cost much more, with fewer insurers competing. Now there are also 7 states plus DC where you can switch around your birthday with no underwriting. That's California, Idaho, Illinois, Indiana, Kentucky, Louisiana, Maryland, Nevada, and Oklahoma. Oregon and Utah allow switches around the plan anniversary date. And Virginia and Wyoming allow switches around the birthday, anniversary, or any time with no penalty. Finally, there are 4 more states where special rules apply. In Minnesota, you can drop your supplement at age 65 and still switch later with no penalty. In Hawaii, you can keep your supplement if you switch to an Advantage plan, then return to a supplement within 2 years. In Texas, you can switch plans once per year during open enrollment. And in New Jersey, you can switch once per year at any time. So by 2026, that's 19 states with special switching rights. Minnesota is also adding a new rule at the end of 2026. If you live in one of these states, work with your agent to shop plans during your window. And for everyone else, that leaves 31 states where you're stuck with the plans you got. If you can't pass underwriting, you're left with 3 options. 1. Keep your supplement plan and pay the increases. 2. Drop it and rely only on original Medicare or limited exposure to costs. 3. Switch to a Medicare Advantage plan, if available in your area. Not ideal choices, but those are the realities. A note on moving finally. What happens if you move to another state? Good question. If you move, your existing supplement plan follows you. Rates may adjust, but you don't get a new open enrollment window. Advantage plans are different moves *do* create special enrollment rights. But the one exception, moving to a state with birthday, anniversary, open enrollment rules. Once you're a resident, you can use that state's rules going forward. The bigger picture, giving people freedom to switch, is a double-edged sword. It protects consumers from being trapped in bad pools, but it also makes insurers hesitant to offer plans in those states, leading to higher costs and fewer options overall. So while switching rights help some, they often raise average costs for everyone else. Final thoughts: these things are rough for supplements right now, but it's not the end of the system. Rates are rebalancing, and some plans are still seeing single-digit increases. If you're hit with large hikes, know your options. Underwriting if you're healthy. Birthday, anniversary rules if your state allows, or Advantage plans if necessary. And for those who made it this far, today's secret word is travel. Drop it in your comments so I know you stuck with me. If you found this helpful, please share. And remember, I've got your back always. Okay, next up, I can also turn today's video into a short video outline for you. Bullet points plus timing suggestions. If you want to check that out, just click here and I'll see you there.